Bhattacharya, President and CIO Equities of Edelweiss Mutual Fund, is on our show now. Trideep, thank you very much for joining in. What have you made of the volatility seen in the last, 3-4 months? Typically, whenever the markets used to fall in the first 9 months, or even for the last 2 years, the sell-offs were very shallow. It's just that this time, even the recovery has been very shallow. We're still down about 8-9% from our recent peak levels. So what is the call now as we enter into 2025, especially over the near term, and then maybe a 6-month call?
Good afternoon and season's greetings to you and all your viewers. I would say the difference this time is that I think we have we are probably seeing an earnings downgrades for the first time in the last 3 years, which is actually of some meaning overall. I mean, overall over the time period that you talked about 6 to 7 months, we've seen earnings downgrades to the tune of about 6 to 8%, depending on which segment you look at. And that's basically have kept the markets on the tender hooks. So in the first signpost that I would be looking out is, can the markets come out of this earnings downgrade cycle in Q3, which is the result season right in front of us? If you were to ask me my guess at this point in time, it will probably be not rather than yes. It'll be Q4 when, in my opinion, some better news might prevail. The second unknowable in front of the markets in January is as Trump takes over and his policies and what it does, what it means for the globe, emerging markets, India, and the likes. And that's clearly unknowable. We'll only come to know on Jan 20th or in and around once that comes through. So that's another catalyst or an event that market is grappling with, which is why you are seeing the volatility. And third, I think this budget that we will see end of Jan is the time when, for the first time, the Modi government will have to balance the capex versus the opex, or the capex versus the welfare measures. And I think the market would be watching out for that one. So quite a few events lined up in front of us. Not all of them are fairly straightforward, which is why you are seeing the volatility. And if I were to give you the near term, I think I would probably expect more volatility, at least for the first couple of months into the year. Then as we get more visibility, earnings story resumes, hopefully better days ahead. So that would be my assessment of the markets today.
Fair point. Thanks, Trideep. Just hold on. One of the stock
conversation with Trideep, you spoke about earnings downgrades. Now, the view is that IT may still see earnings downgrades in Q3. But the question is, will that be the end of the earnings downgrades? And from Q4 FY25 onwards, we will see a recovery, because IT stocks have had a pretty good year, 23% year-to-date up move.
Indeed. And my sense is that Q3 is usually a furlough quarter. The expectations are fairly low. And hence, from a full year perspective, what is important is, as we get into the new year, what they hear from their clients in terms of budget for calendar year 25. My sense is there also, before hearing the Trump's policies, there would be a bit of a caution. But if you look at recently Accenture's numbers, I think these caution is adequately built in the numbers. So relative to expectations, they might just about come okay, would be my my thinking. Over the last 3 to 6 months, we've clearly added more to our positions in IT, and that has held us good. And hopefully, kind of, going forward, it sticks around. With regards to earnings upgrade next year, I am certainly more hopeful on IT, because apart from actually less so on currency depreciation, but more so on the better health of US corporates. As that stands to happen maybe in the back half of this year, IT spending could recover, and Indian IT services companies, as a beneficiary of the same, could benefit. But that will come for the second half of the calendar year, not in the first half though. But yes, better days ahead for IT, hopefully in the second half of next fiscal year.
One theory, Trideep, could be that you should buy when the market is afraid. The market's now afraid of FMCG, of consumption. Mass consumption hasn't yet picked up, and especially after Godrej warned about a difficult Q3, the markets have read all kinds of fears into it. Would you buy mass consumption? That's consumer non-durables, FMCG.
So, great question. And I think last year, same time, when I had a similar interview, we had talked about IT as a dark horse of calendar year 24. This year, I think for calendar year 25, consumption might be the dark horse for 25. Certainly no great expectations and no great numbers to come out, particularly in the first 3 to 4 months of the year. But as the year progresses, I think 2 or 3 things will come to bear. One is the impact of better health of rural economy will start to take shape in the numbers of particularly some of the mass consumption names. Secondly, the luxury part of the economy, which was doing well anyway, might continue to do well going forward as well. And third, with regards to some of the discretionary items, I think overall, as inflation comes down a little bit, they might see a little bit better days in the world, along with possibly a bit of rate cuts. So all of this will probably be loaded more towards the second half of the fiscal year 26. But for that, a gradual accumulation during the first 6 months of the year isn't a bad place to be. But with clearly low expectations in the near term, I think consumption could be the dark horse of calendar year 25.
Okay. What about contra bets in the form of metals or specialty chemicals? They've had a rough year too. Would you bet on that?
Not. So my thinking there is that if we are kind of gradually for the next year or so getting into a stronger dollar regime, if we are looking at a slightly more fragile growth than earlier in the case of China and our other countries in the friendly neighborhood, then maybe metals and some of those globally exposed sectors might not do as well. So we certainly are not betting our hat on those names, on those sectors that we are talking about.
Okay, Trideep, it was a pleasure listening to your views on a bunch of sectors. Thank you very much indeed for joining us. Yes. And here's wishing a very happy 2025 to you and everyone in your family.
Likewise.
Thank you. Okay, with that, let's